Now that you know what a stop loss is, what a take profit is, I'm going to go through something called risk to reward ratio. Now, if you don't know what a stop loss is or a take profit, please watch the previous lessons. Now, your risk to reward ratio is basically what it says in the name. It is, you comparing your risk to your reward. It's the ratio between your risk, the amount of money you are risking, compared to the amount of money that you can potentially gain. Now, like I said, you're comparing your risk to reward. You get, bad risk to reward ratios, you get neutral risk to reward ratios, and then you get good risk to reward ratios. Now, this helps you increase the chance of profitability, especially over the long run. It will help with your profitability. Now, basically, it's you wanting to trade, okay, having the potential to make, in my opinion, a minimum 3 times, okay, or more, comparing to what you're risking. I hope that makes sense. That is basically a good risk to reward ratio. That is a 1 to 3. So basically, for every dollar you are risking, your reward needs to potentially be 3 times. So if you're risking $50, your reward for that trade needs to be $150 or more. So when you look at the ratio, the first number is always 1. That is your risk. You're always risking, 1. So it's $1, whatever the case might be. On the right side is your reward. So you're comparing your risk against your reward. So for a 1 to 3, your risk is, let's just say $1. Your reward is $3. So if your stop loss is 20 pips, okay, your take profit needs to be 60 pips for a risk to reward ratio of 1 to 3. You can have 1 to 1, you can have 1 to 2, you can have 1 to 3, 1 to 10, 1 to 6, 1 to 12, 1 to 20, 1 to 25. Just depending on where you put in your stop loss, where you put in your take profit. So now don't force your stop loss too tight and your your take profit way ahead, because now you want a risk to reward ratio of 1 to 5. It doesn't work like that. Okay, you need to identify your potential areas where price will most likely reject, okay, which is your stop loss, and where price will most likely go to, which is your take profit. You put your levels there, and that will be able to tell you if you have a good risk to reward ratio. In my opinion, let's say I analyze, and the risk to reward ratio tells me it's a 1 to 1 or a 1 to 2. And let's say the analysis, the setup, right, the trade is a high probability trade. I will not take that trade, because in my plan it states I need to place trades that has a risk to reward ratio of 1 to 3 or more. So if I analyze and it's, let's say, a 1 to 4, then I'm good for that trade, because I'm risking $1 to make $4, $10 to make $40, $100 to make $400. All right. So this is how you become the house. People want to compare trading to gambling. This is how you become the house. Okay, the house always wins because you're a step ahead. I'll give you an example now. So let's say your account is $1,000, and let's say your risk to reward is a 1 to 3. Okay, so for every dollar you're risking on that trade, your potential reward is $3. So let's say on this trade you're risking $50. Your reward needs to be $150. So let's say you had only a 40% profitable week. So if you're looking at, let's say, 10 trades for the week, you have only profited 4 trades, meaning 6 were losses. 6 losses and only 4 wins. People think that's bad, you've lost. No, you can still be profitable even though you have lost more trades than you have won, because of risk to reward ratio. Here's an example. So keep in mind, remember, your risk, if you lose, you lose $50. If you win, you make 150. So let's say we place 10 trades, okay? 40% win ratio. So 4 trades need to be wins, 6 trades needs to be losses. Can you see the first trade we win, $150. Second trade we lose, minus $50. Third trade, oh, we lose again, minus $50. Fourth trade, oh, we win, up another 150. Okay. Fifth, sixth, seventh trade, 3 trades in a row you lose. Okay, it can happen. Okay, and it will happen. It's going to happen. This is why risk management is important. 8th trade win, 9th trade win, last trade loss. So 4 trades were wins, 6 losses. Now count up. Because your take profit was $150, you've won 4, so it's 150, 300, 450, 600. All right? So with your profit, you've made $600. You count your losses. 50, 100, 150, 200, 250, 300. 6 losses at $50. So you had $1,000 in your account. You've profited 600, 1,600. You've lost 300 minus. So at the end of the day, $1,300. So at the end of the day or week or whatever, you still profited $300 even though you lost. Because remember, your overall profit was 600, your overall loss was 300. So your equity is 300 profit plus your account balance, which was 1,000. So it's 1,000 plus 300 gives you $1,300 in your account. Even though you've lost 60% of your account. Well, not 60% of your account, 60% trade, sorry. Okay, 6 trades out of 10, you've lost. 4, you've only won. You still came out $300 profit. You are the house if you implement the proper risk management. So this tool here, this blue and red tool, this is why I like tradingview.com. Okay, tradingview.com gives you this sort of tool. This is known as the long position tool. Now, MT4, it doesn't give you this tool. Now, TradingView is free. Okay, you do get different packages where you can pay for better features, better everything. However, the basic sort of tradingview.com is free, so you can still use it. Now, this sort of tool, right? You get the long position tool and you get the short position tool. Right. So you basically get a long position tool, short position tool. This in the picture is a long position tool. Remember, long means to buy, short means to sell. So what this does is the long position tool, for example, it shows you your take profit, right? So you can see where you can put your take profit and your stop loss. So the blue is your take profit, okay? The blue sort of shadow is the amount of profit you will make. The red is the stop loss, so your risk. And then you'll see in the middle, it says their risk slash reward ratio 2.63. So however far you put your take profit and your stop loss, it will automatically calculate for you your risk to reward ratio. So as you can see, the entry was at 1.15514. Stop loss was at 1.14730. That stop loss, okay, is 78 pips. As you can see where it says stop, 0 point whatever, 78.4. It's 78.4 pips. Okay. Take profit is at 1.17573. Shows you 205 pips. So you're risking 78 pips to make 205 pips. Now, if you're using MT4 and you don't use TradingView, what you can do to calculate your risk to reward is you can divide your take profit by your stop loss. So 205 divided by 78 will give you 2.63. So, you know, if it gives you me personally, if it gives me a risk to reward ratio of 2.63, I won't place a trade. So, because remember, I'm a trader that wants a minimum of a 1 to 3. So, thereby the risk to reward ratio needs to be 3 point whatever, okay, or more. So, you know, a 1 to 2 means that every dollar you're risking, you know, your reward is double. You know, that's gambling. I I want more of a higher probability trade, you know, so 1 to 3 is higher. Okay, that is the long position tool. The short position tool is opposite. It's just your take profit, your blue sort of block will be at the bottom and your stop loss will be on top. Okay, works the same way, but that's for a sell. So here's a comparison. Okay, you got your long position and your short position tool, right? As you can see, the first one on both, it's positive risk to reward ratio, where you know your potential loss is minor compared to your potential gain. Okay, your potential reward. That's a positive risk to reward ratio. That's the type of risk to reward ratio you want every time you place a trade. So that's basically 1 to 3 and higher. Your neutral risk to reward ratio is it's nearly the same amount, right? Your potential gain compared to your potential loss. That's where it's more of a 1-to-1. So risking $1 to make $1. That's basically gambling. I mean, you don't want to risk 10,000 rand just to make 10,000 rand. It doesn't make sense. Okay, not in logical way. And then you get your negative risk to reward ratio. This is how I used to trade when I started out. You know, my stop loss will be huge compared to my take profit. You know, that's like a minus 0 point whatever it is. You do not want to trade like that, where your stop loss is bigger than your take profit, because you're going to see flames. Okay. And then if you don't know how the icon looks on tradingview.com for these two sort of tools, it is like that long position tool. Okay, that's for buying, and short position tool is for selling. So here's an example of using your position tools to calculate your risk to reward ratio. So let's say we're looking at this and we see that price is making lower lows and lower highs. So if I just do this, so it says making lower highs and lower lows, lower low, as well as here. Oops. Over there. This will actually be an equal high. Actually a higher high. Anyways. Okay, we're not about that. We're about the market structure. So let's say you see this as well. Okay, a retest of this sort of, it's actually a zone. But anyways, and you put your, let's say your Fibonacci, and you're like, cool, rejected 1, 2, 3 times of the sort of 61.8%. So now you want to enter a sell. So I'm going to use the short position tool because that's for a sell. And before I do that, let me just put this on. All right, so 1, 2, 3 of the 61.8%, and okay, I don't see any left structure. Yeah, here along the line with the 61.8%. Yeah, let's say there. Okay, so now that's where our sort of take profit would be. Let's say I would most likely put my stop loss above the 100%. So let's say we enter there. Okay, this is a big stop loss. So like, as you can see, so our take profit would be at level 1.13736. Our stop loss would be at 1.17611. Now keep in mind, this is the daily time frame, so like it's going to be big. I mean, 136 pips, that's way too big for a stop loss. but just compared to the take profit, the take profit is 250 pips, stop loss is 136, and as you can see, the risk to reward ratio is not even a 1 to 2, it is a 1 to 1. So even if the trade went my way, which I think it did, let me just, yeah, okay, would have hit take profit. However, that risk to reward is very important. So I wouldn't place the trade even though I've analyzed and everything. Remember, it all boils down to discipline, patience, and abiding by your plan. I mean, so 1 to 1, nah. So that's a no-no. Okay, so let's say here, I'm just gonna draw it like this. So price has been making higher highs and higher lows. So higher high, higher low, higher high, higher low, higher high, higher low, and then doesn't break that previous high. Okay, makes a lower low, lower high, lower low, potential lower high. So we moved from an uptrend to a downtrend. Okay, so we need to look for sells again. And as you can see, this is a potential head and shoulders. Let's see. Take that as the left shoulder, that as the head, that as the right shoulder. And as you can see, it's retesting the neckline. So that's testing the neckline. It's testing, that low there. It broke your trend line and is retesting your trend line. Right, so let's say we're looking to sell here. So where is our potential take profit? Oops. Our potential take profit, if you can see here, this is an institutional rejection. So it will be along the lines of somewhere here. Okay. So we then again take out the selling position, selling tool, the short position tool, sorry. So on that entry there, so our entry is 1.21259. Okay, let's say our stop loss is just there, 80 pips. Okay, and our take profit is all the way at the bottom here at this institutional zone, for example. So so our take profit, so our entry is 1.21259. Our stop loss is at 1.22051. Our take profit is at 1.17319. And then, so we're risking 80 pips to make 393 pips. Sounds even better, even without looking at your risk to reward ratio. If we look at the risk to reward ratio, it is 4.91. So it's nearly a 1 to 5 risk to reward ratio. Okay, so that's excellent. So I'm willing, to do that. Risk 80. If we use 0.10, we're risking $80 to make $393. It is worth the trade. So we place the sell. So we go to our MetaTrader 4 platform, and we go to Euro USD. Make sure it's market execution. We say trade. Okay, we put in the stop loss at 1.22051 because we know it's 80 pips. We put our take profit at 1.17319 because we know it's 393 pips. It is a 1 to 4, 1 to 5 risk to reward ratio, and we click the sell button. And let's see if price reached. Okay, crashed down straight away. Made a lower low, lower high, lower low, lower high. Okay, eventually I think it gets hit. Okay, just misses. Oh, there we go. Okay, gets hit over here. Took some time, but remember, this is the daily time. You won't analyze on the daily time frame. I'm just doing it for example purposes. So yeah, as you can see, that was a good risk to reward ratio. The analysis was good. Risk to reward ratio was good. Happy, I'm happy to risk 80 pips. Okay, not in real life. Okay, maximum I would risk is about 50 to 60. But good trade, and this is what you are looking for when you are placing trades in means of your risk to reward ratio. As long as your risk is lower than your reward, then your probability of a long-term profitability is very high, and you become the house of trading.